Hello, everyone. Welcome to the FTX podcast. Glad to have here with me today Bobby Cho, co-founder of CMS Holdings. Welcome, Bobby.
Hey, thanks for having me.
Yeah, it's an absolute pleasure. I've been wanting to get you on the show for a while since Dan said you'd be a good participant here.
Dan makes the regular circles on kind of like the podcast networks.
Yeah, so you stay in the backlights. No one can really see you. The secret
No,
partner.
I mean, I try to participate, I guess, as much as possible. But Dan's kind of in like the day-to-day kind of trading stuff, and so he sees a lot more of that action.
Got it. That makes sense. And then to get this started, would you mind introducing yourself to the listeners?
Sure. Yeah. So as you mentioned, my name is Bobby Cho. I am co-founder and partner of CMS Holdings. Really simply, I guess CMS is a principal investment firm in the crypto space where we primarily do two things. One is we manage an active book of different investments that we are trading in. We like to call that kind of like our liquid book that we kind of trade in and day out. And then the other side of the business, which I kind of oversee, are more on the investment side of things. So longer term illiquid deals that we participate in through, various different projects that are in the ecosystem that are early stage.
Nice. Got it. And to go back in time, Bobby, I'd love to hear a little bit how you got into crypto, what sparked your interest, like what you were doing beforehand.
Sure. So I started my career at a company called Second Market. It was actually called something else before that, but for the public purposes, they kind of know what Second Market is. And so I started my career at Second Market trading. Well, I was actually on the research side of things because the premise of Second Market was the idea that at that time when I was coming out of school, it was pretty much right before kind of like the financial crisis. And then when the financial crisis had hit, the company was focused on creating secondary markets in now assets that have all of a sudden become illiquid, right? Because of the financial crisis, there were a bunch of positions and asset classes that basically just froze overnight. And so one of my first jobs coming out of school was basically to investigate and look at different markets that were functioning perfectly fine, pre-crisis, and now had huge liquidity issues, right? Because people weren't either trading it or putting balance sheet to it, or the banks weren't providing liquidity or backstop liquidity in it. So, it was a very interesting time. We looked at so many different markets to see if they'd be interesting. So a few of them were, limited partnership interests, bankruptcy claims, different fixed income products that basically just became illiquid overnight. And then my focus ultimately ended up being that I wanted to become part of a desk that traded some of those assets. So one of the desks that probably became the most notable at Second Market was this idea that we could provide liquidity for private companies. So people, insiders, investors that had a bunch of this private equity at the end of the day that wanted to get out. And so, at that time, that was a big deal because it had never been done before. And, the Jobs Act kind of opened up a lot of that. But I ultimately ended up moving over to the fixed income desk. And then right around 2013, the CEO, Barry Silbert, which ultimately the company became Digital Currency Group, he came over and he kind of, basically dropped the white paper on us, the Bitcoin white paper, that is, saying, hey, I think this is an interesting market that we should be taking a look at. I think all of us at the desk had kind of a very similar reaction where, we had been working in kind of like a registered securities market that have CUSIPs, have prospectuses and things that you can really dig into. This really didn't have any of that, right? And so, and again, this is like 2013, right? So we, going back to kind of like my research background, I said, all right, well, let's treat this as a market that's brand new that we need to investigate. And so we did a few things, but the biggest things that we wanted to do was, one, we need to size the market. So meaning we need to figure out how big was this market from a trading perspective to see if it made economic sense to build a business around. And then the next thing was to do was, hey, figure out where all the flow is and who all the characters are in this ecosystem. And at that time, it was pretty difficult to find information because it was so fragmented. I mean, today you have a bunch of places and venues that you can go to get pretty decent education and information. At that time, it was more or less just scouring blogs and bulletin boards of what people were saying and bitcointalk.org, and Reddit became very popular as well. And also just, actual like meetings that we were taking. And some of them were things like Satoshi Square down in Union Square in New York that I'd stop by and just figure out who are these people trading this stuff.
Mm-hmm.
And it was around that same time that I met my partner, Dan Matuszewski, when he was at a hedge fund called Bay Hill Capital. And so we got to know each other very well, just because we were kind of looking at the market the same way, just trying to figure out how to trade this thing. And we were dealing with the same kind of, frustrations and just differences between the Bitcoin asset class and things that we had traded previously. And that obviously had to do with like infrastructure and things like that. And so I guess fast forwarding from that point, a lot of those infrastructure, hurdles that I was facing led me to believe that, hey, if this thing's going to take off, this thing being Bitcoin, because that was kind of the only crypto out there at the time, if this thing's going to take off, there needs to be, regulated venues or just venues that people are willing to use and trade and feel trusted. Because at that time, I think Gox had just gone through kind of their issues, and Bitfinex was quickly on the rise. Bitstamp was out there, and so it was still very, very fragmented.
Mm-hmm.
And so that's when I decided to leave and go help build what's now known as Paxos. And so I was the first US-based employee to help build out kind of their US footprint. Learned a lot there.
What year was that?
That was 2014.
Got it.
And
Yes,
so at
from the
that
very
time,
beginning of Paxos.
exactly. And at that time, like no one, so it was called, the exchange is called ItBit, but at that time, like no one really knew who ItBit was, because obviously they were Singapore domiciled. That's where most of the team was. But really, like the big hitters at that time were Bitfinex and Bitstamp. And so they had a grand vision. What most people don't know about ItBit and Paxos is it actually started out of a hedge fund based in New York called Cedar Hill Capital. So here are some hedge fund guys, traditional hedge fund, long short equity fund guys that had gotten into this market so early on because they kind of saw the vision and started to decide to build an exchange. And so that, fast forward, that had become Paxos, which is, a regulated trust company based here in the US. I spent about 2.5 years there. And then in 2016, and let me know if this is getting like too nitty gritty.
No, please. Love it.
But like in 2016, there's like this huge like debate in the ecosystem, because like Bitcoin was, hanging around. You had gone through a few cycles of prices rallying and then all of a sudden crashes, whether it was based off China news and things like that. Either way, in 2016, there was this huge inflection point, because you had a bunch of VC dollars that had gone into Bitcoin businesses. But now this idea of permissioned or whatever distributed ledger technology started to come about. So permission blockchains, that became all the hype. That's where all of the investment dollars were flowing. And so, I kind of made a conscious decision that, hey, I wanted to continue to be in the, whatever, let's call it public blockchain space, the Bitcoin space, versus trying to create, intra blockchain infrastructure that, maybe banks would use or some other institutions.
Mm-hmm.
And so that's when I decided to join the folks at DRW. They were building Cumberland. They were, since probably like 2014, they were one of the largest traders out there. And so I had an opportunity to, meet with the team and see what their vision was like. And then that's when I decided to join them in middle of 2016.
And what was sort of your sorry to interrupt there, but what was sort of your role kind of at Paxos? What were you up to? And then when you joined these guys at DRW, what were you up to there as well?
As like with most startups, you just wear, multiple hats. And really,
Yeah.
all you're doing at the end of the day is like, hey, whatever pops up, like, you're just trying to manage it and handle it. And so it started off because we were dealing with a lot of stuff and we didn't have a ton of resources. It started off as, hey, let's just try to figure out how we can launch effectively a custodian for digital currencies or crypto. And again, in 2014, there was like, there's no roadmap. No one had ever done this before. People were people were going after money transmission licenses and things like that. And we said, well, let's just do something different. And that different thing was, hey, why don't we create the first digital currency trust company? So this would model things like ICE and other things like that. They're all New York-based trust companies, because we felt that would give us kind of a better, robust offering than what other folks are doing out there. And so it was managing a lot of that process, and then also managing a lot of the exchange as well. So that was, managing some of the agency trading that we were doing there, and also just making sure that what we were doing on the exchange side was something that the customers wanted.
Mhm. And then with the DRW group, that was much more trading focused, I can assume, right?
Yeah, exactly. Much more trading focus. Again, everything was on a principal basis. Our risk to manage, and so that was really informative to me and helped my experience, because one, managing risk to that degree, and it was interesting because you're managing risk in crypto, but you're also dealing with very institutionalized and legacy risk systems that were at a much larger firm. And so we kind of looked at ourselves as kind of a startup within a bigger firm. And that was, like mentioning, that was really helpful for my experience, because I had always been helping to build startups or companies that didn't have those types of resources. And so lo and behold, now I'm at effectively, like, let's just call it a startup Cumberland that had a ton of resources, but we faced other problems, right? And other challenges, which was, well, how do we like integrate this into the bigger company and things like that? So just leveraging everything that I had done before into trying to, help create Cumberland.
Mm-hmm. And then this
and
was,
so yeah, that was, yeah.
sorry, when was this happening, the Cumberland stuff? 2016?
That was like 2016.
Got it.
And then, so I was there, obviously until last year. That whole experience was really, from a career standpoint, was really eye-opening to me in a great way, because I got to learn from arguably, a lot of people that were way smarter than me. I got exposed to different groups of folks at DRW, not just the crypto folks, but we tried to leverage a lot of other folks that were, trading different asset classes, right? Because as you know, crypto can touch a lot of different sectors in the world. And what I mean by that is, like, simple example, hey, well, there are now, people who are creating, ETFs and other closed-end type of products. And so we need to leverage some of the other folks in different groups that maybe understand those markets a lot better.
Mm-hmm.
And so crypto, to me, kind of like brought together a bunch of different minds within Cumberland and DRW broadly, about like, well, hey, here's this like new thing. Here's this thing that we're trying to build off of. Let's bring the smartest people together to just try to figure out how to extract the most value out of this opportunity. And so, yeah, it was pretty awesome.
Did you guys have the foresight at that point of how, well, big comparatively to then the crypto markets were going to be, or was it just a foray into unexplored territory?
I think it was the latter. I think like we always knew that there was like a lot of promise behind this, and you all, like, I think we had always geared, a lot of what we were doing towards like institutionalization of crypto. And what I mean by that is just the way that we traded, the way that we, managed our risk and things like that. We always wanted to be kind of best in class, because we always, the thesis was that like markets are super efficient, and that over time, people are going to find opportunities, especially in crypto, and that you need to be ready for tomorrow and not just for today. And so I think we always like had this idea that we're all in this because we think this is going to be something bigger than it is today. But to see where it is today versus 2016, I think I'd be hard pressed to think that anybody thought that we would be here from maybe not so much like a market cap perspective, but like a product offering perspective, just the different intellectual pockets that crypto has tapped into.
Yeah, I would say that's one of the biggest things from my perspective, is just how many incredibly smart people are working in this space. It's very great to see.
It's amazing. And like it's funny because like now today, and like you guys have first-hand experience of this, is like now you're seeing like a lot more structured products that are being offered out there. And I use that term in different ways. So structured products being products that maybe certain liquidity providers are structuring for their counterparties to maybe trade off of. So that could be, different types of bespoke option opportunities or derivatives, but also like now people are talking about things that I used to trade in the beginning of my career, which are actual structured products, right? Like people that are trying to put asset-backed securities on, crypto and things like that. So it's kind of like the world is colliding, and you just don't know what's going to happen.
It's Inception. You're going back in time, but it's actually going forward.
It's really weird. Sometimes I think about it, where things have gone. It's really been kind of like this blender of my previous experience and kind of where we are today. So I'm like super thankful of like every single like manager that I've ever come across that basically has helped me to the point that I am today. And even like the bad ones, I try to think about all of at least the positive parts of what came out of that.
Well, it sounds very serendipitous that your first job at this secondary markets firm was the place that ended up being digital currency. It ended up being what are the odds of that? And then that somehow you still end up going down this whole cryptocurrency trajectory. Not to interrupt, so you're with this whole Cumberland initiative startup. What was the next step there? I'd love to hear how you ended up with CMS.
Sure. So I spent about 3+ years at DRW, and it got to the point where I said, okay, well, I felt like we had built something really, really big, really robust. Just looking back at all the stuff we built, it's incredible. And so it got to a point where personally, I felt like I needed to try to climb like my next, Everest or whatever you want to call it. Not to be like too whatever ambitious about it, but
Yeah.
but like I felt this tugging at me where I was like, look, I need to like do something, right? I need like we've done this for 3+ years, and as you know, in crypto, that's a lifetime, right? Because you're at least for the role that I was at DRW, I mean, the desk was 24/7, and you know this very well as well. Like that one that takes a toll on you, obviously, but also like you feel like you've worked 2, 3, 4 times the amount that you would have in a traditional seat because you're never off the clock, right? And so so I said, okay, well, one, I said, I feel like I have a very decent grasp about what's happening in the trading world, and so why don't I try to do something different? And part of the differentiating thing was, why don't I try to, get more on the longer term investing side of things? Because effectively we were a liquidity provider. And so we at DRW. And so we kind of lived within seconds, right? Milliseconds. That was our world. And I said, well, okay, I feel like I have a very good grasp on that world. Why don't I try to do something else and leverage this into some longer term investing where I have to learn a little bit more or a lot more. But two, I'm still able to leverage a lot of stuff that I've learned before. Part of that clearly shows in our portfolio of, the types of things we invest in, where we're definitely leveraging our previous experience into this new foray into, longer term investing. And also, Dan and I and our third partner, Julian, we kept in touch obviously throughout the years. Dan's been a very good friend of mine throughout the years. And so we were always just, trying to figure out, well, what made sense for us, both personally and professionally. And it finally got to the point where I think all of us were in a position that said, we'd love to start something together.
When you started, did you know from the beginning that you wanted to focus on the longer term investment side, or did you guys have startup phase and then were able to differentiate? Like, was it you three? I'd love to hear a little bit about how you actually got operations running when you three decided to go for it. Like, did you guys go have a beer and say, okay, fuck it, we're doing this, or how'd it go down?
It wasn't as ad hoc as that. Obviously, we had conversations, we talk about things. It got to the point where I knew where I wanted to go from a career standpoint, whether it was, at a VC or somewhere else or whatever. But I knew that I wanted to focus on some longer tail stuff, mainly because I wanted to get out of the day-to-day trading stuff. One, there's a lot smarter people that can do it than me. Two, I just felt like I needed a different challenge. Dan. Dan is probably one of the greatest traders that I've ever met. The division of labor internally and just our relationship made it very complementary. Dan is able to focus on all the day-to-day trading and the liquid stuff while I keep a pulse and keep track of everything that's happening on the deal flow side of things. And it's really those two things that ultimately mesh together at the end of the day at CMS, where, hey, we're managing a portfolio of these illiquid investments, but ultimately over time, what's going to happen is they're going to either vest or launch or things like that. Then that gets ported over to our liquid book. And from there, we decide what we want to do with the risk. Meanwhile, this whole time while things are vesting and while we're investing in different things, we've been helping out these projects, whether it's, just relationships, product testing, and things like that. And so both sides of the business are very synergistic to one another. We just aren't the shop that's like, hey, here's the capital, go ahead and run with it. We feel like the capital is just a part of what we're trying to provide. The other thing that we're trying to provide is like, hey, we have, like Dan and Julian included, like we have all of this inherent experience helping to build companies, building companies, which we are doing at CMS, and also like a bunch of trading acumen as well. And we've seen a number of cycles in crypto as well. And so we're trying to like bestow a lot of that onto the companies that we invest in. And then ultimately we're, let's say if it's something like, Serum or something like that, like ultimately we're going to become customers of them.
Mhm. So it sounds like, Bobby, you just wanted to stay around the startup scene, huh? You wanted to have some say in all this.
I wonder, yeah, it's like, my friends who are not like in the crypto scenes, who work at traditional shops, or maybe they have regular professions. They're like, man, you just keep going down the risk curve of like at least for career wise. And I say, well, I just don't see it as being too risky, just because I feel like it's just a different permutation of what we've been doing before. It's just now like, hey, you got all this experience, you've seen some stuff now, like step up to bat and see what you're made of. That's kind of the way that I look at it.
How do you decide on these investments? Because I've seen you guys have been involved in a lot of these raises and are participating with many of these projects that are coming out. And I'd love to know a little bit of your criteria of how you decide, because I've been helping with that as well on our side, and
Mhm.
sometimes it's really hard to tell between the fluff and what's real and what's not.
Yeah, I mean, I think like well the one thing is like the criteria that we really look at is like, hey, can we feed off is wrong word. Can we utilize whatever we're investing in to help both sides of the business, both sides being the liquid book and the illiquid book, right? So for example, like a Dex is a perfect example, right? Like, hey, we can invest in them, we can help build their product and get it to be, as big as we want it to be, but also can we trade on this thing, right? And can we become customers of this thing? I mean, that's kind of like the first criteria, because ultimately, if we can't use it at the end of the day, there's only so much we can do and how much value we can provide.
Mhm.
So that's one thing that we look at. And then the other thing is just, are we, what do the economics look like? Those are all just usual questions. And generally, since we've kind of seen the cycle in 2017 and the whole ICO hype and things like that, we feel like we have a better understanding of whether it's like token economics or how people are structuring things. But at the end of the day, these are, as seed stage, early stage investments that uh, you would expect, at least if you come from the regular startup world, that first iteration of product and offering is gonna look different than 12 months down the line. You would hope it would, because the project or the company or the co-founders have been iterating all along. And so it's these are early stage investments, and so you have to take um, there isn't as much historical, whatever, empirical data or information that you can lean off of versus some more qualitative stuff that you're going to apply to make a decision.
And then how do you look at, so something that's been intriguing me a bit, just watching this whole DeFi run we had and whatnot, is that
Yeah.
how do you look at the dichotomy that all these projects are obviously similar ones, we're out there raising and no one was giving them a penny, and then we get into a really hot market phase and then pretty much anyone can raise money? Does this infer a better quality of product, or like how do you match that sentiment with the money being given to companies at certain periods of time?
Yeah, that's a good point. So all of that, like when that type of stuff happens, like in terms of like, let's just call that like fundraising dynamics that end up happening, you have to start thinking about risk sizing, right? Because the game has changed a little bit, right? So you've had, let's just take for example, you have X number of competitors in one space. Let's just call it the DeFi space. Then all of a sudden, whether you have some copycats or people who, and I don't necessarily think this is a bad thing, but people who have been, actually this might be a good thing, people who have seen what the first generation products have done or not done, Now they're going to iterate off of it, right? I mean, you're seeing that in the exchange space. You're seeing that in different sectors of crypto and DeFi, obviously, as well. And so that's when you have to start being able to maybe change the way that you're thinking about things, because ultimately, I think if you continue to not be aware of kind of what's on the horizon, that can be kind of detrimental. And so I think you start thinking about, well, how am I going to size the risk that we're putting into maybe this one sector, which we'll just call DeFi,
Mhm.
right? And things like that. And so we try to keep a pulse on it very closely, but as you know, it just changes so much.
In some way, this is validation for projects that may have not been validated before because there wasn't like surety that there was a product market fit. And now when there's so much attention, there's more chance of it. Is that
Yeah,
a correct
I
analysis?
think that's a way to think about it. Yeah, for sure. I mean, like if anything, and you probably echo this, is like if anything, over the past 12 months, fundraising terms have gotten much more favorable to those that are launching these projects. Whereas before, maybe there wasn't as much capital chasing some of these deals, or there just wasn't as much interest on the buy side. You could kind of dictate a lot of stuff. But today, the other part is you have a lot more comps out there in the market as well that you can benchmark from.
Mhm.
And so that's super helpful too. So I think, look, at the end of the day, there's a lot more information about this stuff. People are getting smarter every single day about how to structure these deals, and also knowing what ultimately the community wants and doesn't want. And that ultimately just helps build a better product at the end of the day. And I think ultimately, regardless of what's happening, best product wins.
Yeah. No, I totally agree on that. Or best product with or good product with the most horsepower behind it.
Yeah, I mean, look, I was having a conversation earlier today with someone that runs a fund, and we were just talking about just different dynamics in the space, and there's different sectors of people that are trading, investing in the space, and the topic came up about, well, like, there's definitely this difference between some of the much larger, let's call them institutions out there in the space versus some of the mid-tier folks, or just some of the folks that are just more agile. And especially in this market, if you spend, a year or two going to develop, or not develop, but investigate a product and doing a bunch of back testing, that opportunity might be gone by the time you're ready to launch, or to go ahead and try to capture that
Mhm.
market.
Mhm.
It's just that the space just evolves so quickly because um, you're getting different inputs changing from all sorts of different sides. So meaning you're having, let's just say, buy side sentiment that continues to change because other things are happening. You're having competition that ebbs and flows. And we saw this, a few weeks ago now. You're seeing regulatory changes that will continue to change. I think that's going to be a constant, just because this market is so new. And then you also have like new stuff that's launching. So like the ground underneath you continues to sort of shift, and so you in turn, as for us, like being buy side participants, like you in turn need to be cognizant that that's happening, and you can't kind of get like trench foot.
Yeah, I 100% agree with that. I think that a lot of these projects don't realize that they just need to get their darn MVP out there and pivot as much as they need to, but at least show that they have something out. Because as you said, yeah, people are just missing the bus. Because it's interesting. We speak to projects who have great ideas and they're like, yeah, we're going to launch in 8 months,
Yeah.
a year. It's like, oh man, you should launch like 1/20th of this in 3 weeks and then build on top of that. But
that that that's exactly right. I mean, you really don't. It's kind of like practice. You can practice all you want, but until you get into the game, you don't really know how you're going to react from a competition standpoint. The best feedback you're ever going to get is to either put on that trade, because one, you're going to get like immediate feedback were you right or wrong, especially in crypto. And two, you really get some good data behind what you had initially thought. Some of the best VC-backed companies do this really well, and I'm talking non-crypto. But some of these companies do it really well where they are constantly testing new things with their customers. This is kind of like off the cuff, but like, Pinterest is a very good example because they will introduce new things to different subsets of customers to see how they react and start implementing it. Whether it's, hey, the buy button's going to be over here, or you're going to have to click on this button. Like, what do people actually want and are using at the end of the day? And I'm sure that that's what you guys doing at FTX as well, just trying to figure out, hey, how can we tweak it a little bit so that we can gain a little bit more.
Finally, we are from the UI UX perspective. We're definitely going hunkering down on that finally, which is great to see.
We gotta brainstorm on the maybe you guys already have, but we gotta brainstorm. Like you guys have launched a lot of products. We gotta brainstorm on that banner a little bit.
On the
like the ticker banner, like
ticker
where
banner,
you go
yeah.
and find the different.
The never-ending scroll bar.
Well, it's tough. It's tough because like the number of products and projects launching like aren't stopping, right? And so it becomes like you have like a data set problem where it's like an infinite number of inputs could end up happening. It's like, how do you actually framework it from a navigation standpoint?
Yeah, definitely. If you have any good suggestions on that, please just drop it in our chat, man, because we're working on UI UX, so anything helps right now. To the listeners as well, if anyone has great ideas, please send them through. I kind of wanted to ask you, so you saying you were in this private equity liquid markets, I can assume that must have helped you be able to price crypto, because like it seems like a really hard market to price, and crypto is hard to price. Was there any corollary there, or not really?
No, not really. They're just like such different companies, because like the traditional deal side of things, I mean, they're like mature companies or financials. There's a bunch of information you can find out there. And so I think part of it is just realizing that the user base itself continues to change, and they are being like inundated with other product offerings out there. It's like when you go to eat and it's at like a diner, the diner menu is like 20 pages long, right? Like you just don't know what to eat. And so that's kind of the way that it's been like in terms of some of these things that are launching out there. You just have to have a thesis, a framework to put all of that into, and then also make your decisions based off of that.
Do you guys raise external capital? Is that part of CMS or not really?
No, we structure it so that maybe one day we wanted to leave that option open. We go back and forth. We revisit it, like every quarter, but at this time we are not taking any outside capital. It's just partner capital that we manage. Mm-hmm. That's just what we landed on.
Okay. All right. So let me just start back up here.
Sure.
And my next question for you, Bobby, is like, what are you guys focusing your energy on right now in CMS? So I know, DeFi must have been a big thing. You guys were probably farming as everyone was. What is happening now as that starts to wane?
Sure. So we still do a good deal of trading in some of like the major coins, like the higher market cap coins, and trying to understand, effectively like where the ball is going to be heading, going into Q4, or we're already going into the end of the year and into next year. We always try to think in like future time horizons. Generally, our hold period in like the liquid book can be anywhere from, a few days to, a few months. And so we're always trying to think about where the world is kind of heading towards. We're just like some particular stuff, obviously like on the deal flow side of things, we've been very focused on kind of like cross-chain functionality and stuff like that. Because we think that interoperability that people have been talking about forever is something that's something we want to be top of mind with. We've been doing a bunch of work in kind of the Polkadot ecosystem. Obviously that had launched very shortly ago. And so just making sure that we aren't caught off guard by what might come up in the very near future. And at the very least, if it doesn't, then we've done our homework and we kind of understand what's happening there. One thing is constant, that there will always be change. And so, I used to walk in every day and be like, hey, well, I like this plan. This is what I want to do today. And lo and behold, something will ultimately change, and you have to adjust with it.
Thanks for that. I completely agree, Bobby. One of my core beliefs in life is that the only constant is change. So I think it's a great perspective to look at everything through.
I think that's like a really good kind of characteristic to have as well for people like that work in this industry. Is like, look, you have to be very agile, and you have to be very comfortable with this idea that what you think is going to happen is probably not going to happen. So you better figure out what the other like tail risk type of situations could look like.
Yeah, absolutely. And then going back on the interoperability thing, I totally agree. That's one of the reasons I'm so excited about Serum, and I've become such an evangelist of it, is that not only is the product kick-ass and I love it, but I love the fact of what it could allow when it interacts with other chains. So I really hope that we can go more towards this blockchain agnostic viewpoint and kind of just functionality focused within the space.
I agree. And I think the conversations in the future aren't going to be like, hey, well, this was built on this, and then it can talk to X, and then it can go into why. It's like you're just going to think about it as like one thing, or whatever, let's call it like one network, and then ultimately like everything that's happening below it you don't really care about because it's all connected. I mean, I think that that's the way that we will be talking about a lot of these cryptos, but for now we're still obviously in the building phase.
Yeah. I mean, that's how most of legacy stuff is. So I guess it wouldn't make sense for it to have the same thing. And then if someone really did want to go look at something, the records are always there for them to go check.
Exactly. It just becomes a much easier conversation, an education curve for new people kind of coming into this space. I mean, Dan and I talk with a lot of traditional folks out there still today, because either they're curious about the markets or things like that, or just want to be aware of what's happening. And still, like, there's like the education curve for Bitcoin. I think like you've kind of topped it, meaning that most people know what it is, what it does, and most know what the value proposition is behind it. Some still argue it, but I think most know what the value proposition is. But now, like, you continue to see new and new stuff built, and then you try to explain like what yield farming is, and you try to explain like different types of decentralized oracles out there, and think like that's where like the whole education stuff you start out from the ground up again. And so, I think you guys have been doing a good job about educating people and like others as well. But again, it's like space, things just keep expanding.
Then my last question for you, Bobby, you are a builder, you've been in the space for a long time. Now you're a founder, you're an entrepreneur. What are some words of wisdom you could leave or advice that you could leave with people that may want to build their own company or enter the cryptocurrency space and haven't been able to get past certain hurdles?
It's a good question. I'd probably say it actually starts from the very beginning of your career, meaning like things that you've learned previous, relationships that you've made even at a very young stage of your career, leveraging people who are more senior than you and people who have more experience than you. Like those types of things, I think at times people take for granted because like, oh, well, what am I going to learn from this? It's like, looking back, it's like, man, I learned a ton from even the people that maybe I didn't work well with, or, I didn't think that they would provide any, let's say value or anything like all of that stuff. Ultimately, I feel like has culminated into where I am today. It's like, and so I'd probably say in the very beginning, it's like, just learn and try to be like a sponge and take in as much as you possibly can, because ultimately you don't know when you're going to have to unlock that knowledge and leverage it in some other way. But I guarantee you will, and maybe not that direct permutation, but in some way, shape, or form, you're going to use it. And so that's probably one. And then I think the other thing is like when you actually do decide to take the leap and start your own thing, look, it's a business, but it's kind of like this living, breathing thing, right? What you put in is what you're going to get out. And so it's just this constant kind of growth and managing that growth and making sure things aren't slipping through the crack, even though I'm sure stuff will, and just staying on top of it as much as possible. You have to almost, you got to kind of baby it, right? Because it's still the very beginning stages. And I think people think that it's, some like real glamorous thing that, just kind of pops up. It's like, no, like there's all these small pieces that you just add up that ultimately will hopefully one day become a successful venture.
Thank you. Thank you for that. And I think the listeners will appreciate it as well. Thanks so much for coming on the show, Bobby. I really appreciate it.
Yeah, no worries at all. Thanks for having me, and look forward to chatting with you soon.
Sounds good.